Tax revenues for public services. Today, the U.S. government taxes each person's income. Businesses also pay taxes on what they earn. State and local governments may place additional taxes on certain goods. One common tax is the sales tax. This means buyers must pay a few pennies in tax for each dollar they spend at a store. Many people also pay taxes for owning property, such as a home. Governments use taxes to raise money. This money collected through taxes is called revenue. Governments use this revenue to pay for public services. The federal government uses tax revenue to build roads. It pays the members of the U.S. military forces with tax money. State and local governments also use taxes to carry out their duties. They provide schools and parks. They supply police and fire protection. Without taxes, governments would not be able to provide many of the services people depend upon. Paying taxes is a key responsibility of being a good citizen. Taxes as incentives. Taxes increase the price that people pay for goods and services. For example, if a state or town has a sales tax of 5 cents per dollar, buyers will pay more for an item in this state or town than they would in a place that did not have a sales tax. If a buyer bought something marked $5, he or she would have to pay $5 plus a tax of 25 cents for a total cost of $5.25. The 25 cents in tax goes to the government. In this way, taxes can limit how much people can buy. Businesses want people to spend their money on goods and services, not on taxes. Governments must work hard to keep taxes as low as possible to avoid hurting businesses. Businesses in states or towns with lower taxes may have an advantage. If people can buy an item for $5 in a place where there is no sales tax, or for $5.25 where there is a sales tax, which do you think they would do? Of course, people would usually choose to buy the item for the lower price. Another way to say this is that taxes can create an incentive. An incentive is something that encourages you to act in a certain way. Low taxes are a positive incentive. That is, low taxes on an item encourages you to buy it. High taxes are a negative incentive. People are less likely to buy something for which they must pay high taxes. Government borrowing. Tax revenues pay for much government spending, but governments do have other sources of money. They can borrow money in different ways. One way is to sell bonds. Of course, the government must pay back that money.